Well, this is actually a thing to bring up because I've never had this happen before in my life. I've gotten a ton of questions about bankrupt companies. Stocks. So these are the common stocks, which is the most junior security. It's at the very end of the line of companies which have said that they are filing for bankruptcy protection. So these are companies that want a court to sort things out between their creditors and stuff to come up with some sort of plan for them to be able to pay their debts, because otherwise they wouldn't be able to pay everyone off fully as these debts came due and stuff. And of course, they first tried usually to raise money some other way, to talk to them outside of court and things like that. And yet people are interested in these stocks, the stocks in bankruptcy.
Buy bankrupt companies, yeah.
So the stocks are almost always worth nothing. So the expected value is nothing. So like as an example, if you bought a lottery ticket has an expected value. It might be like 20 cents for every dollar you put into it, right? But a bankrupt stock normally does not have that. It's actually worse than buying a lottery ticket. And so I'm very surprised when people ask me questions about these stocks. Mm-hmm. Now, people point out there are examples of stocks which have filed for bankruptcy and yet have not been wiped out entirely. Mm-hmm. That does happen sometimes. And there are stocks that have done, and then but they're very weird examples of things. So I can even think of a couple examples of companies that didn't even need cash put into them and stuff through the bankruptcy proceedings. But normally, those things are very particular to like a huge judgment against them, a legal judgment that they can't possibly pay, or environmental stuff. You know, that like a legacy liability that's going to be way too burdensome or something like that. It is so usually not that the business model was unable to succeed during these times and stuff. And as you've seen, if you in other businesses, whether it's restaurants or cruise ships or whatever, that had no revenue coming in, they were able to access markets and get money. Mm-hmm. If it hadn't been believed that you couldn't, I mean, if people believe that this was a perfectly temporary issue with these companies that are in bankruptcy now, mm-hmm. they would have been able to access credit on some terms, even if it was like a very senior security thing and they were putting up money for a short period of time and getting it out first and whatever, but they would have worked out something. Certainly creditors and stuff don't decide, oh, I think bankruptcy is the best way for me to get paid off 100 cents on the dollar. Mm-hmm. That makes the most sense for me if this is an otherwise viable business. Mm-hmm. So there's something very wrong with it. And many of these companies already had issues with them before they went into bankruptcy, before they went to COVID, I should say. And yet I get lots of questions from people. Some people baffled by it, but other people just like interested in it. And I don't understand the speculation in bankrupt stocks. I've never seen anything like this before. Mm-hmm.
Well, it's kind of like the whole Hertz thing. And they're issuing, you know, the stock ran to whatever it did. And Vetla and I talked about it on the rundown. And then I think the day after or 2 days after, they announced that they were going to do an at-the-market offering pretty much to pay back their debt or help to support the debt. And basically saying all the equity holders are going to get wiped out, essentially. You know what I'm saying?
Right, yeah. So one way to evaluate things in terms of a debt, this has nothing to do with stockholders, and that's what we talk about all the time. But a good way of doing it, and a way that I would look at it, is if you're a more junior part of a capital structure, you look at the market value of the. If you're a more senior part of the capital structure, you look at the market value of more junior parts of the capital structure. So in other words, if you look at a bond, and a company has out one bond, let's say, and it has common stock, and the bond is selling for a small amount of money, right? Mm-hmm. And yet the stock has this tremendous market cap, right? You figure that no matter what, you're fairly well protected by the fact that the market is assigning a huge value to something that can only be worth anything if you first are worth everything you're supposed to be worth. Mm-hmm. Okay? So that is a very common way of doing it. It's probably statistically one of the best ways, is by saying, okay, so if you own debt in Hertz or something, if there's a huge market value placed on the common stock, then you figure, well, I'm more likely to get paid off here. If only literally, like in the case you're talking about, that they could issue stock.
Yeah.
But that's baffling from the perspective of something that I just feel like isn't paying attention to what's ahead of it in terms of being paid, in terms of that being paid. When I talked about a preferred stock and stuff as an example, where I said there's a preferred stock I should have bought, the common stock value, the market cap was huge compared to the value of the preferred stock. A preferred stock is senior to a common stock. So the common stock can only collect dividend if the preferred stock paid a dividend. So in other words, did I think they were going to pass on the preferred stock if the common stock was worth tens of billions of dollars or whatever? No, I thought it was probably pretty good. So in essence, the market is telling you that if they're putting any value on the common stock, then the preferred is going to mature at its face value and is going to be paid all the dividends it's supposed to be all that time too. So I can see why like debt would react to having these absurd valuations of the common stock. The likely explanation, of course, is that these are, which is what happened in like 20s and stuff, low price stocks. Low priced in the sense of the price of the stock is low, not in the sense that the market cap is small. And we would say generally that's irrelevant and stuff, but I don't understand it. And I guess it's also a different kind of person participating in the market. I don't know why it's happening. There could be reasons. The biggest reason could literally be COVID. That
people are at home, right?
Are at home and people can't gamble.
Sports aren't going on.
Yeah.
And all you hear about in the news is stocks going up. Look at all these companies that are running like crazy. They're all $1, $2, $3, $4, $5, right? And it's almost like becoming a self-fulfilling thing. When companies announce bankruptcy, they just start to shoot up because everybody piles in, right? Look at a company like Chesapeake or Hertz or all these other ones. It's like they announce bankruptcy and then the stocks start to run, and it really becomes like a greater fool game, right? Who's the last one to get off of the train? So I wonder if people are reaching out to you because the stock just continued to go up. That's why they're reaching out. All this fascination with companies that are announcing bankruptcy, virtually saying that they're going to be worthless and they're interested in buying it. I mean, are they reaching out to you as like a distressed investment, or what are they trying to get out of you?
Yeah, it's going up, so they figure it must be worth a lot.
Yeah.
But I should point out, sometimes it's very clear it's not worth anything.
How do you distinguish that? What is that?
I'll give you an example. I looked at a stock one time. It's not one of these. It traded at a positive value. An agreement was in place that over a certain amount, which was only going to be enough for it to pay off its creditors, the value had to go to the company that acquired it prior to bankruptcy. So it was basically acquired by someone prior to bankruptcy. Its assets were acquired, like its factories and stuff. But the name and stuff of the company stayed behind, and it still had claims against other companies. Now, I looked at it and went, wow, there's a really good chance they could win this case and win it at a large amount of money. But I also read clearly by reading the documents, that they had agreed that all of that above that went to the acquirer. So people were buying a stock in which there was literally, legally, no way in which they could collect money above that. Now, maybe they were thinking, okay, once they get that money, then they can have another lawsuit to try to undo that agreement or whatever. But literally, they were buying stock. Now, it wasn't a huge amount, but it was something that was valued in, as big as some actual legitimate OTC companies. Okay. So we're talking very small, nano cap stock, but people were speculating and buying it. There was an active market for it. You could buy and sell the stock each day for a stock that literally was telling you it had to be worth nothing because it had promised to pay everything above what it owed people to its acquirer. It was not, it could not be paid to this company, to its shareholders. And yet they were the shareholders. And this went on for years. This company, because the court case was still going on, it's not like the company was delisted, it wasn't ever listed. But so it wasn't like the company stopped trading over the counter. People were still buying and selling the stock. So there was still a speculative market in it for years in a stock that, to me, the way I read it, there was no way it could ever pay a 1 millionth of a cent. It wasn't allowed to.
So what happened?
To this day, the court case hasn't been decided.
Really?
Yeah. It's sort of been decided, but it's on appeal.
But I just wonder if it becomes like a trading vehicle.
Yes, that's all it is.
That's all it is.
And I don't understand if it's just a trading vehicle of whether they buy and sell it that way, or in that case, I think legitimately a lot of people may have known of the court case, but not known of this other part to it and stuff. So there may have been actual investors in it. But it's a thing that strikes me as very, very weird because it's like when it's like when we talk about inverse short things and stuff.
Yeah.
We're talking about vehicles which, if you hold long enough, should be worthless. So, this is speculation in a way that's unlike anything else. The value is expected to be nothing eventually. Now, there could be weird exceptions, and maybe if the stock goes up and then you're able to issue stock and then whatever. I'm not saying it's entirely impossible that all common stocks can never have any of their value. But in general, we're talking about the emails that I get. I'm a little familiar with some of the companies. So the emails I get are generally about stocks which I expect to have no value. So that is so much worse than any form of, I don't know. It's worse than most forms of gambling.